So to cover those, I'd like to welcome in David Nicholson. He's the Chief Research Officer at the Futurum Group. Now, David, I'm just getting a first look at Rivian's numbers, but I'm seeing the market response down 4% and a pretty significant miss here on their EPS. What are your initial takeaways?
Yeah, initial takeaways, no real surprises. Guidance for new vehicle sales remains the same. I think the downside is kind of an increase in the guidance for loss. So the expectation is that more money will be poured into the machine to get the R2 launched and running. That's against a significant headwind in the U.S. in particular, with the elimination of tax credits that are due to end on September 30th.
And so I know that the whole play for this EV maker was building a case towards eventual profitability, the R2 a big component of that. But this miss, I just want to give our viewers the numbers, a loss of 97 cents per share. That missed the estimates for 76%, by 27%. So a really significant miss there, an increased loss from the same period a year ago. Now, their quarterly sales, it is important to note, came in at 1.303 billion, which did beat the estimates, not by a whole lot. 1.29 was what they were looking for, about 1%. But that R2 vehicle that you're talking about, do you think that's going to be the primary focus of the call for Rivian, for analysts? Is that going to be the big question?
It has to be. It absolutely has to be. It's the only thing. It will determine whether they are successful and move forward or if they're done. And I think a lot of the questions are going to be around how do they compete in the global market? U.S. market, looking back, we were looking at around 8% of new vehicle sales on a running basis being EVs, battery electric vehicles. We expect that to be cut in half by the elimination of these subsidies. So now you're looking at 4% of vehicles sold. The primary market for the R2 would be the US, and a lot of people making a decision about a $45,000 vehicle care about a swing of $7,500 in cost, while at the same time we have carrots and sticks that look very, very different in Europe and China. And so Rivian's got to compete on a global stage. It's becoming increasingly difficult. And I think that's what we should be pushing their CEO on later today.
And also, I know they have that joint venture with Volkswagen as well. I think that total deal size about $5.8 billion. Do you think that that is going to be a point of focus on the call as well?
If I were them, I'd make it a point of focus, because comparing what we expect to be low single digit new vehicle sales accounting in the U.S., we're talking low 20% in Europe already. So, a 5x comparative rate of uptake of EVs. So Europe absolutely should be the banner headline for them in terms of opportunity. I don't know that they can execute. The challenge is that Europe doesn't have the barriers against companies like BYD in China that we do. They're at least not as high. So Rivian faces a stiffer competitive market, albeit higher demand in Europe for EVs.
So Rivian, obviously, with a lower share price, right now about $11.65. But, the downward move of less than 4% right now, does that feel like the right amount of move on what I guess could be described as a disappointing quarter?
Yeah, frankly, you get to a point with a company where you're valuing the chairs and the real estate and other things, and you can only go so low if you look at how far they are off from their high. So I think that's reasonable. I think that the R2, the new lower cost SUV, will determine the future of the company, and a lot of that will be determined by execution in Europe.
Well, David, we appreciate you being with us to break down Rivian's earnings today, and lots to discuss on all of the calls this afternoon. Rivian missing on their EPS, a much greater loss than expected. And also to note that they did not increase any of their guidance on sales there for cars, expected to stay in range for 2025. But that's David Nicholson from the Futurum Group. Thanks again for being with us.